evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Thursday, the 13th of February, 2025, about 6:15 p.m. Mwah! Happy Valentine's Day to all. If you don't see me tonight, you'll get that for tomorrow. All right. Well, today was an important day because we got an education on what Trump meant by tariffs. I'll come to that in 1 minute. Let's first look at what we have coming at you in the morning. We have import-export price index data at 7:30, advanced retail sales. That's an important number. The market likes to look at it. In the hierarchy of everything, you got jobs data, CPI, PPI, and I think advanced retail sales. I think those are really four very important things the Fed looks at. The Federal Reserve is going to release their monthly industrial production and capacity utilization at 8:15, and then we'll get business inventories for December. I don't consider them very important, but they come out at 9 o'clock. They're already too old. That's why. I want data that's much more current than that. But what we did get is we had President Trump sign an order on tariffs and then explain the order that they're doing. So first off, understand, nothing's in effect right now. What the president did to existing tariffs that he's had, that he has to explain away. Is this going to replace what he's done? I don't know how this impacts, and I'll start off that way. What comes March 1st for Mexico or Canada? Don't know if this is the replacement for that or what it does. Remember, he had worked out a deal with them that they had to do certain things on the border and everything over drugs and the fentanyl and so on. So let's go into what he did. He made it complicated and simple at the same time. Rather than say, I'm putting a blanket tax on everybody of 10% or 25%, smarter move. If you think back to World War II, and I mean, most of you weren't alive then. I was born literally after it myself, literally right after it. And you think back, as America became this phenomenal engine, president after president got something from countries that wanted to address the American market and get to our base where they could sell products and so on. And then if they weren't working right with us, we put tariffs or they'd put tariffs because we were such a powerful economic engine, similar to what China became recently. And we could flood markets with our goods and so on, so they'd start protecting their own markets with tariffs. This has gone on literally in one manner or the other since then. What President Trump wants to do is finally address the issue and say, why do any of us have tariffs? And his way of doing that is pretty simple. And it's not necessarily the best way, but it's his way. His way is, you have a 25% tariff on American cars coming to you. We're going to tariff the cars you bring to America by 25%. You want to put tariffs on American machinery that comes to you of 70%. We're going to put likewise machinery of 70%. Now, the big question is, what does likewise mean? Is it all machinery? Is it machinery in a certain area? Well, Howard Lutnick, our new Secretary of Commerce, he has a team that has got to put this together. And we're talking, they've got to create spreadsheets instantly, find a way to work, maybe do it with artificial intelligence to get a handle on what this all is. Because how you group it together is very important. Is it autos? Is it a specific price auto? I can go on and on what it's going to do. He's given everybody to a minimum of April 1st. Now, that doesn't mean that they'll go on then. They can go on in May. It depends how far along they can get everything. In the meantime, the playing field is now known. And if that playing field's known and you have a tariff of 50% on some U.S. goods and you want to sell into the United States similar goods, you know that you're going to be facing a 50% tariff. So what are you going to do? Are you going to keep it that way to protect your local market? Because your good is going to be 50% more here. It's probably not going to sell the way that it had been selling. A lot of decisions have to be made by country upon country. That is what this is about. And that is his way of doing it. I know I'm making it simplistic, but that's how you understand things, are getting them to the simplistic point. So, number one, it doesn't happen tomorrow. Number two, the goal is to have this done by the nominee for Secretary of Commerce. I guess that's the right way to call this, for the first. I think Lutnick is still a nominee. I don't know who signed in and who isn't. We have so many people coming into this. And by the way, we have RFK, who did get approved by the Senate, and he's our new health person. He'll have a cabinet position. So you've got all this. This is the way to understand it. And that is why the stock market took off today, in part. It wasn't derailed by that. Hey, maybe the market's open for U.S. goods. Maybe we don't get the tariffs on other things that we need so bad. There's more positive than negative in looking at this right at the surface look. That's the way that I think you approach it, okay? All righty. So if you look tonight at the stock market, you held the rally that you made today. The gold market looked at this as still an inflationary move. Is it because of tariffs? No. You know what the gold looked at today? That the Fed can go back to the PCE numbers and the way that the PPI and CPI numbers are, and they're both stronger in inflation, but when you put them into the spreadsheets and you do the magic to come out with your PCE index, the odds are that index fell, didn't go up, closer to the Fed's goal. And since that's one of the Fed's favored indexes, the market takes that and saying, hey, that's not bullish the dollar. That's not meaning that the Fed isn't going to be able down the road to do something. If they see inflation's falling, that's one of the things that they wanted to possibly start lowering interest rates into to cushion the economy. And because of that, you rallied up to the 114, nearly 115 level in the bond market. And while these are all down a little today, you were up 1.5 points in this market today. That's a big rally by any stretch of the imagination. On the energy markets, well, you know, this is about the possibility of Ukraine and Russia creating some form of a truce between things. And if they do, one of the things that happens is Russian sanctions on oil will come off. So you've suddenly taken the market down because of that possibility. I'm making this simple for you, but it's the way that it should be explained. Dollar down on that news, currencies up on it because the dollar may not have the super strength that it had. When we come to the stock market, these are all good things. First off, we don't have the bad news today. There's a 25-50% tariff on everything coming to the United States. Copper's going to have a 50% tariff. Metal's going to have this tariff. No. Whole different way. If you as a country put tariffs on our whatever, we're going to put tariffs like that on your whatever. That's a very different than blanket tariffs. Market liked it, took off. Number two, you're still caught in this quagmire of this sideways action, but you're so close to all-time highs in the market, you could easily end up making new all-time highs on a Friday close. And then no one that is short any of these markets would have a profit if you make a new all-time high. That's one way to think of it. In the futures, unlike stocks, for every long, there's a short. And that would mean the total open interest has a loss at that point in time on a futures contract. They may be making money in option strategies against it. That's not what I'm saying. You have the pattern of bullishness all of a sudden. So I think the pros are going to sit in and say, hey, I'm going to take a stab. If we get back into the 60.91 level, and admittedly that's 40 points away from here, maybe I take a look at that market. I think you're going to run into your resistance, as you know, at the upper Bollinger Band. I've said that for a while, and now that you're approaching at that 61.59, it's 20 points away, I'll stay and say what I said, and you're overbought. So if you get up there, I do think the pros are going to take money off the table against that number, even though it's a high. You're already doing that in the NASDAQ. Look, you've come back to that band. You have a market that's overbought. They're going to try to embed. You can see that on it. There's no bearish news that I see can come out tomorrow to upend this that I know of right now, not those reports at least. Interesting time there. In the Dow, not quite there. The Dow's been very quiet. Do you notice how it's gotten itself married at that 18-day average of closes? Now, you do have the trend up on the swing line. The market's at 448.37, which is over the 18-day average. You have the trend up, the bias up until you take out 2 days ago's low. And the target, if it can go up, is 45,140. When we come to the Russell, I'm more than content to say this is still the weakest of the indices. The hope for this would be interest rates fall. That's about the only way I see this index coming alive. And it could if certain things happen. But you're in the middle of a market that's still bearish, down to the Bollinger Band, couple of days in a row, and bounced away. As I said yesterday, the market had challenged the 200-day average and wanted no part of staying near that. Today, you rallied all the way back. Now, here's the beauty, and I just want to show you, because at the end of this, we're going to show the Bollinger Band course again. And folks, it is so important to get a feel for it. Here's what I teach. As you're coming up here and you get into, let's go to this, Bollinger Bands, I teach if you're not embedded, and you've heard me use the word embedded, the odds are the pros are coming out. If the market falls, often, not every time, but often markets like to go back to the 18-day average of closes. Let's see, I think I did that wrong. Let me come back to where we were. There we are. And let me give it to you this. There, I'm doing it correct. And if it drops down, maybe it gets to that 18-day. Take a look. This is February 11th. So I don't want to give you any idea that this is far. We're trading tonight for February 14th. If it continues down, you know what I'm going to tell you. If you're at the lower Bollinger Band and the market's oversold, the pros are probably going to take money off the table, and then it's the flip-flop. I would look for the market to try to possibly, doesn't mean it have to, if it's not trending, go back to the neutral state, which is the 18-day average of closes, and away you are. Do you know how to do that? Do you know how to figure it out? 11 chapters in my course video shows you how to do it, spiders, stocks, ETFs, how to figure out. This is the other key to it. This is so important, how to tie this together with this. The two really come together. Do you come out of everything? Do you hold on to part of a position? I teach that in it. The 2-year note, oversold, hit the lower bands? No. I see the trend is down. Absolutely. But that's where you cover the shorts. Let the market get away, in my opinion at least, from an oversold condition. In the dollar index, I'm now wondering, have we made a top in the market? I was looking, if you'll remember, the special report I did 3 weeks ago, I believe it was, on the dollar, and I thought the market would challenge the third price count, which was just by the 110 level, 109.83 in the market. It went up there, and the market has since given everything up. That was the third count. You don't go typically beyond 3. Occasionally, you'll go to a fourth or a fifth. And when I say occasionally, got your hand? That's how often it happens, all right? Markets like coffee that went vertical can do that. You can do it watching Meta, another market that can do that. And yes, our charting software, our QT, and some of the others, they'll handle all that with you. But in any case, higher highs, lower lows, comes down here. Look where the market went today, to the Bollinger Band, and basically hanging out at that number saying, okay, but it stepped out of its uptrend. There is no trend in that market. And if the dollar's void, you probably void in the euro, because 57% of the dollar index is made up of this. Lower low, higher high, coming up. Maybe you stretch out to the upper band. In the British pound, the warning sign has been there that it wouldn't close under the 18-day average. But I've also said I don't think it's got much upside beyond the upper Bollinger Band. We'll find out. If I'm wrong, you might go back to the 127 level. Maybe. Right now, we'll see. You're overbought, and this is where, if you are long, I think the pros are coming out of the market. Bitcoin is still in a downtrend. Momentum is flattened out. Sometimes that's a warning that the market's not going to do anything. Both numbers are over 30, so it doesn't mean that you can't get short selling in there. You have to cross this high over here in order to say, I'm out of the downtrend, and maybe the market goes back to the neutral zone of the 18-day average to regroup. As we came down in Bitcoin, notice how you made your run. Did I say Bitcoin? Brent crude. That's still on my mind. Brent crude, look how you came back. And you know what I'm going to tell you. The first challenge of a 18 or 100 or a 200-day average, they're important numbers. And you came down, and that's just what you did, and you're trying to hold that. Same thing here. You'd already been through the 200. And notice when you rallied back up, and you did it tonight, what had been potential support becomes potential resistance. If you can clear that, then the 18-day average path is open again. You have a pattern in the heating oil of a lower low, a higher high, and a market that fell back into the support level, again fighting at the neutral number, the 18-day average. I call that the line in the sand, down to the major support of the 200-day average. And if that were to give ground, then the lower Bollinger Band. I don't see anything there. And as I warned yesterday, I said, be careful here. The market's probably going to make a run. Let me just get you to where we're at. Here we are. This is Wednesday. I said, if it's going to continue because of the polar vortex and all coming in, wouldn't surprise me that the market makes a run to the upper Bollinger Band. But now you got to start watching the weather, because that's a rough number to want to get bullish beyond. You tell me what it did today, and this is where you're at right now. So I feel pretty good in those type of analysis. I hope this has helped everybody understand a little bit as to how Bollinger Bands work, how tariffs are going to work, and so on, and what the president's trying to do. And I'm trying to explain it in my own words. I admit that. Could I be off a little? Maybe. I think I've got it, though. So when we look at this, this is my course, and I created it last year, so I call it a new course. I put together moving averages, Bollinger Bands, and momentum oscillator for you. The three together, it's not one, it's the three create the whole idea as to what I teach here. And, you know, the simplicity of Bollinger Bands is that the market, in theory, will trade within them 95% of the time. What does that mean? How do you know if you should stay, come out when that's hit? What do you do? I give a 14-day trial, so you see every morning live. Well, when I call it live as I'm recording it, at 6 in the morning, the futures, at 9, the spiders, the stocks, and the ETFs, and show you and reinforce in you what this is all about, with specific buy here, sell there recommendations, how to work with it. You get our charting software with it as well. How do you get the course? You just go to iraepstein.com, education. You can move your cursor to the top here, and away you go. I'm Ira. You have yourself a great evening. I'll talk to you all tomorrow morning. You take care.